Hello guys. Hope you all are doing absolutely fine. Chalo. Let us start our chapter, which is depreciation. And today is lecture 1 of depreciation. So write down concept number 1. What is depreciation? So the first and foremost question that arises in this lecture or in this class, it is, sir, why we are reading depreciation? Why? What is depreciation, and what is the role of depreciation in accounting? So let us take an example, and through that example, we shall study the different concepts relating to depreciation. Okay. Okay. So don't write this example. So let us take an example. Let's suppose this is a businessman. Let's suppose his name is Mr. Ram. And there is another businessman. His name is Mr. Sham. Okay. His sale for the year 24-25. Let's suppose his sale is rupees 10 lakhs. And his purchases is rupees 8 lakh. Okay. Also, he purchased a machinery, or let us take another example. He purchased furniture for his office. Let's suppose he purchased a furniture for his office rupees 2 lakh. Okay. Whereas on the other hand, Mr. Sham sold goods rupees 10 lakh. His purchases was rupees same as Mr. Ram 8 lakh, but he did not purchased any furniture. He did not purchase any furniture. So what I am telling you, I need you to calculate the profit of Mr. Ram and Mr. Sham. I need you to calculate the profit which is earned by Mr. Ram and Mr. Sham for the year 25 and 26, or 24 and 25, whatever is the year. Okay, so let us calculate the profit of Mr. Ram. So what is the profit, sir? Profit is simply means selling price minus cost price. We have all studied in class 8, in class 7, that profit is equal to the sale value minus the cost. So what is the profit of Mr. Ram? Sir, the profit of Mr. Ram will be the sale. Sale price is 10 lakhs minus purchase value. What is the purchase value, sir? 8 lakhs. So the gross profit, this is the gross profit. Gross profit is 2 lakh. But sir, he also purchased the furniture for rupees 2 lakh. That means he also expended, he incurred expense of rupees 2 lakh. So we shall also deduct the value of furniture rupees 2 lakh. So the net profit is 0. Okay. On the other hand, I'm not saying this is correct or wrong. I'm not saying this is correct or wrong. I'm just saying we calculated this net profit. Okay. On the other hand, we shall calculate the profit of Mr. Sham. His sale is same as Mr. Ram, 8 lakh. His purchases is also same, 8 lakh, but he did not purchase any furniture. So this 2 lakh will be his gross profit and also his net profit. Now I'm asking you, the profit of rupees 0 of Mr. Ram, is this correct or not? I'm just asking you, the profit we calculated of Mr. Ram is correct or not? Sir, it is incorrect. It is not correct. It is incorrect. Why? Because, sir, you have taken the whole amount of furniture as an expense. You have taken the whole amount of furniture as an expense. So what will be the expense for the furniture? Sir, when we bought the furniture, let's suppose on 1425 rupees 2 lakh, the owner of the furniture said the life of this furniture will be 5 years. The life of this furniture will be 5 years. And till the year end, 31st 3 26, 31st 3 26, we have only used this furniture, for 1 year only. We have used this furniture for 1 year only. So if I say the total cost of this furniture is 2 lakh and it will last long for 5 years, so what should be the yearly expenditure on this furniture? Sir, it should be 40,000 per annum. It should be 40,000 per annum. So here we need not to take 2 lakh as an furniture expense. We shall take 2 lakh minus 40k. So the net profit will be 1.60 lakh. 1 lakh 60,000. The correct net profit earned by Mr. Ram will be 1 lakh 60,000. Okay, so this 40,000 that I have taken as an expense in the name of furniture is called depreciation. Is called depreciation. So what is depreciation? Sir, in simple terms, we can say that depreciation is nothing but the cost of the asset. Depreciation is nothing but the cost of the asset which is spread during the life of the asset. It is called depreciation. Okay, so we can say that depreciation, write down, we can say that depreciation answer means means the systematic systematic allocation of cost of asset, or in other words we can say that depreciation is the spreading of the cost of asset on the basis of life of that asset. So what is depreciation? So depreciation simply means systematic allocation. Come on, systematic allocation of cost of assets, or we can say that in simple terms, it is the spreading of cost of asset. We spread the cost of asset on the basis of life of that asset. So depreciation simply means this. Now the question arises, sir, why we are doing that? Why we are not writing the whole amount of 2 lakh, but we are charging only 40,000 as depreciation? Because the cash outflow, as you know, the cash outflow is rupees 2 lakh. When we buy the furniture, when Mr. Ram bought the furniture, he paid rupees 2 lakh. So the outflow is 2 lakh. But why we're not charging the whole 2 lakh? Why we're charging only 40,000? Why we're spreading the cost of the asset in accordance with its life? Why we are doing this? So write down concept Number two, matching concept. Write down matching concept. So we can't fully understand depreciation chapter or depreciation if we don't understand the matching concept. Because if I tell you that you should have to spread the cost of the depreciation according to the life, you will say okay, okay sir, we will do this, and okay how this will we'll write the accounting as depreciation as an expense. But the question is, why accounts say that, why we spread the value of asset? So the answer for that is matching concept. Okay, so what is matching concept? Matching concept simply says that when you take advantage or benefit, when you take benefit of an expense, when you take benefit of an expense, then you should charge that expense in that particular year, whether amount or cash is flowed out or not. Sir, can you say it in other words? For example, let us take an example. Don't write that example. Suppose I took a house on rent, and the rent is rupees 20,000 per month, and I have taken that house for the year 25, 26. Let's suppose I have taken this house on 1st April 2025 till 31st 31st March 2026. So what is my financial year, sir? My financial accounting year is 25 and 26. Okay. So I have paid the rent for the whole year. I have paid the rent for whole year. And what benefit I have taken? Sir, I have taken the benefit of staying in that house for 12 months. Okay. But let's suppose my landlord, let's suppose this is my landlord. Okay. What's his name? His name is Mr. Bhola. Let's suppose Mr. Bhola came to me on 31st March and he said, okay, Mr. Sunil, you have paid the amount of 20,000 rent for the March. You have paid the rent for the whole year on time. But I'm in a little bit of situation. I need urgent money. So can you please pay me 2 month rent advance. 2 month rent advance, that will be rupees 40,000. So for what month he is asking me? Sir, he is asking me for the next year, April and May. He is asking me he is asking me to pay the rent for the month of April and May of the next year. Next year means 26 to 31 3 27, for the next financial year, that is 26 and 27. I will say okay, Mr. Bhola, I will pay you the amount, there's no issue, and we will adjust it later on the next year. Now I'm standing on 31st March 2026, and now I'm recognizing my expenses. Now let us match my expenses with my benefits. For the year 25 and 26, for the year 25 and 26, how much benefit I have taken? Sir, I have taken benefit of 12 months for that room, because I only stayed in room for 12 months. I only stayed in this house for 12 months. So how much benefit I have taken from this house? So only for 12 months. But how much amount I have paid for this amount? Sir, you paid rent of 20,000 per month, and for the whole year you paid 2 lakh 40,000. But your landlord asked to pay 40,000, that is the advance rent of 20 advance rent of next 2 months. Now match this. Is this matching or not? Is this matching or not? You have taken the benefit of 12 months, but you're recognizing the expense of 2,60,000, which is for 16 months, which is for 16 months. So what matching concept says? Matching concept simply says, if you taken the benefit of, if you have taken the benefit of an expense or an asset for that particular period, then you should recognize that expense for that particular period only. Or in simple words, I can say that I have taken the benefit. Let's match it. I have taken the benefit. How much benefit I've taken? Sir, I have taken benefit for 12 months. So, how much rent should I recognize? Sir, you should recognize 2,40,000 rent in the current year of 25 to 26. This is the matching concept. So, matching concept simply says you should match your expenses, you should match the benefit of your expenses with the amount of your expenses, whether the amount has been paid in advance, whether the amount has not been paid. Sir, what did you say in the last line? I'm saying that, let's suppose for the whole year my rent was 2,40,000, but I asked Mr. Bhola, my landlord, okay, sir, I don't have the money right now, and I can only pay you the amount of rupees 2 lakhs only, and the balance 40,000 I will pay you later or in the next month. Okay, now match. Now again match. How much benefit I have taken? So you have taken the benefit. Still, you have taken the benefit of 12 months. You have taken the benefit of 12 months. But how much amount you have paid? Sir, I have paid only 2 lakh because I didn't pay 40 lakh. I said that on 31st March, I said, Mr. Bhola, that I will pay the balance 40,000 in the next year. So now let us equate this. The benefit I have taken for 12 months, but the expense I have paid, the outflow is for 10 months. Is this balancing or not? Is this equation is equal or not? No, sir. This equation is not equal. So now again, we should balance it or equate it. Sir, the benefit you have taken 12 months and the rent for 12 months is 2,40,000. In this 2,40,000, 2 lakh have been paid and 40,000 is outstanding. But you will recognize the whole amount of rupees 40,000 as rent expense. You will recognize the whole amount of rupees 2,40,000. Sir, but we didn't pay the 40,000. Yes, this is the matching concept. Whether you paid or not, you have to recognize the expenses for which you have taken the benefit. So you should match the benefit taken from an expense or an asset to the amount of that asset or expense, and should recognize that amount in that particular year. It doesn't matter that you pay or not pay. It doesn't matter you paid in advance. It doesn't matter if the amount is still pending. Okay. So have you got the whole concept of the matching concept? Now write down. Have you write down the example? If not, I'm giving you a time to write down the example. Okay. You can pause the video and write the whole example. Now write down. Write down. As per matching concept, we have to record or recognize only that part of expense, only that part of expense in relevant in relevant year for which we have taken the benefit. Or we can say that, लिखिए, or we should we should match the cost of benefit taken from an asset or expense and should record the cost related to that benefit in relevant in current year. You can write down in current year. Okay, so it was simple. लिख लिया? Okay, now have you got the answer? What was my question? My question was, sir, my question was, why we are spreading the amount of asset? I said that we purchase the asset furniture of rupees 2 lakh, and I said you should spread this cost on the basis of the life of the asset, that is 40,000 per annum. So why we are doing that? Because of matching concept. Because of matching concept. Okay. Now relate this matching concept with depreciation. What I'm saying that I have purchased this asset for rupees 2 lakh and for 5 years. So in the first year, how much benefit I have taken? Sir, if you say that the benefit you have taken is 2 lakh, if you say that the benefit you have taken is 2 lakh, that is the whole amount, then the whole amount will be recorded as your expense, and this expense name is depreciation. Okay, but sir, it is not done because the manufacturer of this asset, the seller of the seller of that furniture said that you can use this asset for 5 years. So that is not the problem. I have taken the benefit of 2 lakh, but for the 1 year. So what is the amount of benefit? Sir, the amount of benefit taken is only 40,000. So if I've taken the benefit of rupees 40,000, so my benefit will be equal to my expense value, cost value. So this amount will be my depreciation. Now you know why we spread the amount of asset. Now you got to know why we are spreading the amount of depreciation on the basis of its life. It is because of the concept matching concept, because of matching concept. Okay, समझ आ गया? Okay, write down concept number 3. Okay, in the first concept we didn't write the value. Okay, we write concept number 3. On which assets we charge depreciation. I'm asking you on which assets we charge depreciation. I'm asking you what are the assets on which we charge depreciation. You know the depreciation. Depreciation is simply means the spreading out the value of the asset according to the life of the asset. Okay, and how much benefit we have taken from that asset, it is recorded in that particular year. The value of the benefit. Okay, so now I'm asking you what are the assets or what on which assets we charge depreciation. Sir, we studied in 11th class. Our teacher said that you will charge depreciation on fixed assets. Don't write down. Don't write it. Our teacher said that we should charge depreciation on fixed assets. Is this correct or not? I'm asking you. Sir, it is correct. Our teacher said that we should charge depreciation on fixed asset like machinery, like building, like any other furniture. Okay, so if I tell you, let's suppose I have a asset, fixed asset, land. Land is my fixed asset, and its value is 50 lakh. Should I charge depreciation on 50 lakh or not? Oh, sir, our teacher said that you don't charge depreciation on land. Land is a fixed asset, no doubt. Land is a fixed asset, but we do not charge depreciation on land. Why? We do not charge depreciation on land. My question is why? Do you have answer? If you have answer, then comment. Okay, now let me tell you. We don't charge depreciation on fixed assets. We don't charge depreciation on fixed assets. We charge depreciation on some fixed assets. Or I can say that we charge depreciation on fixed assets which are depreciable, which are depreciable. So I can say that I have to categorize the fixed asset in two terms. One will be the non-depreciable and other will be the depreciable. So I will charge depreciation on those fixed asset on which I can charge depreciation. Like building, I can charge depreciation. Like furniture, like machinery, like equipment. But on land we cannot charge depreciation. Because why? Because land has unlimited life. Land has unlimited life. And what I said about the depreciation, sir, it is a systematic allocation of the cost of the asset on the basis of life. But the land life is unlimited. We don't know how much the life of this asset will be. It will be 100 years, it will be 1000 years, we don't know. So we assume that the life of the asset is unlimited, and for that reason we cannot charge depreciation. But sir, our teacher said that, and we learned in 11th class and other classes, that we charge depreciation on land and building. We charge depreciation on land and building. One question we have remembered that that said charge depreciation 10% on land and building. So sir, we have charged the depreciation on land and building? No, you charge depreciation on the building part, not on the land part. For example, I have a land of rupees 50 lakh. I constructed a building on it for rupees 70 lakh. Okay, let us take another example on which fixed assets. So I should say that we have fixed assets and we should categorize it non depreciable fixed assets, and other are depreciable fixed assets. We shall charge depreciation on depreciable fixed assets and not on non-depreciable. Sir, what are the example of non-depreciable fixed assets? Land. And let us suppose there is a dairy company, milk manufacturing, and you should said that milk and milk product company like Amul, Mother Dairy. So you know that they have many buffaloes, many cows. So the value of cows, the buffalo they breed, they had in their farms, what they recognize these cows and buffaloes, what they recognize in their books, the value of these cows. So these cows, or let an example, for the horse races, they breed horse races, they groom horses. So the value of horses they bought, they groom, what they recognize, they recognize that horse, that cows, that buffaloes in their books as their fixed asset. But we can say that livestock like buffalo, horses. Okay, so if I'm in a business of milk business, and I have purchased cows or buffaloes of rupees 10 crore, so the 10 crore value is my fixed asset, in the name of livestock. But can I charge depreciation? Can I charge depreciation of buffalo? I go to the buffalo and ask the buffalo, oh, okay, you have provided with the milk. Now, what depreciation amount should I charge on you? The buffalo will say that amount, no, sir. So you cannot charge any kind of depreciation on livestock. So there are fixed assets which are depreciable, and there are fixed assets which are not depreciable. Okay, so sir, we cannot charge depreciation on livestock and their value will not decrease. Yes, their value will decrease, but not according to depreciation, according to another accounting standards. And remaining are our, the second are our depreciable assets like machinery, building, furniture. Okay, so write down, we charge depreciation on these fixed assets. Because why we charge depreciation? because because we use these assets, use these assets, and when we use these assets there will be normal wear and tear. We can say that toot foot, wear and tear. Or if we are not using that asset, still we have to charge depreciation due to passage of time. Okay, so we have to charge depreciation on depreciable assets because we use the asset, and we if you and if we use the asset there will be normal wear and tear, toot foot. And if I take an asset, let's suppose I bought a furniture, I wrap it in a plastic, and I'm not using it, then then also I have to charge depreciation. Why? Because of passage of time. Because accounting standard 10, the standard deals with the depreciation, says that you have to charge the depreciation because the value of the asset will decrease. Systematic allocation of your cost due to the usage. And if you're not using it, then there will be no wear and tear, but you still have to charge depreciation because of passage of time. And due to the passage of time your asset will become old. Your asset will become old and the value will decrease. Okay, have you written all that? Concept number three. Three, on which asset we charge depreciation? Sir, we charge depreciation on depreciable assets. So write down, we do not charge depreciation. Okay, so write down, note, fixed assets. What do we mean by fixed assets? Sir, fixed assets means the resources of an organization, the resources of an organization which are not held for sale. These are the resources like machinery, building. These are not purchased or held for sale. We don't have intention that we will purchase and sell that resource and will make a profit from that. No, we will use them, but will be used in organization for for manufacturing, manufacturing and manufacturing or providing services or administrative purposes. Sir, what is administrative purposes? Means use in office, like our furniture, like computer. Okay, and to be given on rent. Let's suppose I have purchased 10 cars to give to other people on rent. I told them that you should give me 2000 rupees per day and use my car, and the whatever amount you have gained, whatever fare you have taken, I am least concerned about that, but you should give me 2000 per day. So if I purchase that car but I'm not using for manufacturing, I'm not using for providing services from my own, I'm not using for my administrative purposes, I'm using for it to rent out, to let out and earning the income, so that amount of 10 cars will be my fixed asset. And 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 write down, generally the life of the asset is more than 1 year. Okay, so what is our assumption for fixed asset? Sir, our assumption, I can say that our assumption, actually the life of the asset is provided by the manufacturer. When we purchase, let's suppose when we purchase a house and the builder said that this house will stay for 90 years, for 99 years, for 100 years. So what is the life of that house or building? Sir, the life of that house will be around 90 years or 100 years. When we purchase a car, the manufacturer say that the life of this car is 20 years, or let's say 40 years, or let's say if you maintain this car, then this can go for 50 years and above. But the manufacturers always fix the life. Manufacturer always fix the life. So the life that manufacturer fix, if it is more than 1 year, then the asset will be our fixed asset. But if it is less than 1 year, then this asset will become our current asset. Okay, write down concept number 4. Methods for charging depreciation. Methods for charging depreciation. There are 9 methods. Sir, 9 methods? Yes, there are 9 methods to charge depreciation or to calculate depreciation. We can say that calculation. There are total 9 methods, but we will only study 2 methods. We will only study 2 methods. So the first method is straight line method. In short form, we can call it SLM, straight line method. Write down depreciation. Depreciation. In this case will be original cost of asset minus scrap or residual value divided by life of asset. The life can be in terms of, generally in terms of years, but it can be in terms of months or days. But generally the question uh, of depreciation will be for the years, not for the months or for the days. Okay, so how we calculate depreciation under straight line method? Sir, we calculate depreciation under straight line method by uh, subtracting the residual or scrap value from the original cost, and we divide the balance amount with the life of the asset. Sir, can you explain it with an example? Okay, let us take an example. Write down building purchased rupees 10 lakhs. Life of building, the builder said that life of building will be 20 years. And after 20 years we will demolish the building, and by demolishing the building, what scrap that we have generated, the scrap that we have generated can also be sold. That is called scrap or residual value. 50,000 at the end of 20 year. When we can generate this scrap, sir, we will generate this scrap at the end of the 20 years, at the end of the life of the asset. So how we calculate depreciation, sir? It is very simple. We can say that we are dividing the cost of asset on the basis of life. So how much amount I have to pay for the building? Rupees 10 lakhs. But how much amount I will recover at the end of 20th year, when we demolish the building, the bricks, the scrap that we generated can be sold for rupees 50,000. So what will be my total net outflow? Sir, my total net outflow will be 9 lakh 50,000. So 10 lakh minus 50,000, and my total outflow will be 9 lakh 50,000. And we divide that 9 lakh 52,000 on 20 years. So 9 lakh 50,000 divided by 20 my depreciation per annum 47,500. This will be my depreciation per annum. Okay, it was simple. So this is the method when we charge depreciation according to the life of the asset. And why it is called straight line? Because for year one depreciation will be 47,500. For year 2, what will be my depreciation? Sir, for year 2 my depreciation will be 47,500. For year 3 my depreciation will be same. So in straight line method, your annual depreciation will always same. So write down, in straight line method, annual depreciation charges will be same. My emphasis is on annual. Noted, annual depreciation, not 6 months, not 12 months. Annual depreciation will be same. On the other hand, लिख लिया? On the other hand, the second method is written down value or diminishing diminishing balance method. See below. नीचे देखते हैं, मतलब we don't have space here, so I will write here. We shall call it WDV in short form, written down value or WDV. So what is the formula of depreciation in this method? Sir, we shall calculate depreciation under root divided by under root, and the root under root nahi hai. This is nth root, n. This is the n. So how we shall provide depreciation? The formula is 1 minus n scrap या residual value divided by original cost. Original cost. So let us take an example. Same example. Let's suppose machinery. We have purchased a machinery for rupees 50 lakhs. The life of machinery is 10 years. And after 10 years, its scrap or residual value, its scrap will be sold for rupees 1 lakh. So how we shall calculate depreciation according to this method? Sir, we will write depreciation is equal to 1 minus under root. What will be n? N will be the 10th root. 10th root. And in the numerator, we will write the scrap value, and at denominator, we will write the original cost. Now, are you able to calculate this on your normal calculator? Can I calculate this with my normal calculator? Yes, sir. You can calculate by that formula. Add 12 times, divide 12 times. That kind of formula you can calculate. But generally, this uh, this under root button is given is for the second root. But I have need to calculate for the 10th root, not for the second root. So how shall I calculate? Sir, I will use my internet to calculate this. Okay, so what is my value? So my value of machine is 10 lakh. 1 2 3 4 5 6, and years will be 10 years, and my scrap value is 1 lakh. So my scrap value is 1 lakh. SLM method, I have to calculate in WDV method. You can see that the depreciation is 90 90 90. Yearly depreciation is same, and yearly depreciation is same only in straight line method, not in WDV. So I shall calculate again. Okay, so depreciation is 20,561, 16,000, 12,000. So you can see that depreciation is decreasing as the year increasing, depreciation is decreasing. So it is called diminishing balance or return down value method. So sir, we do not have internet in our exams, how we can calculate this? You don't have to calculate this. So sir, how we can solve this problem? Write down, you will always get percentage of depreciation in question if the question is for WDV, yeah, diminishing balance method. In question, you the question always give you the percentage. Let's suppose the question will give you the percentage 10% or 20% or 15% and the value of machine. So you don't need to apply this formula. You will don't have to need to apply this formula to calculate depreciation. In question, percentage of depreciation will be given and you have to charge that percentage on the value of asset. For example, write down example, machinery purchased rupees 10 lakh, depreciation percentage WDV 10%. Okay, so what will be my depreciation for year 1? Depreciation year 1 will be 10 lakh. Depreciation year 1 value is 10 lakh and depreciation is 10% per annum. So what will be my depreciation for year 1? Sir, it will be 10% of 10 lakh. And what is the 10% of 10 lakh is 1 lakh. And what is the balance of my asset? Sir, my asset balance, or I can say that net value, or I can say that written down value. This value is written down value. So what is the written down value? Sir, when you deduct depreciation from the original cost, come on, when you deduct depreciation from the original cost, the balance amount, I can call it net value, balance value, or WDV, means written down value. Okay, so what will be the depreciation of year 2? Now, depreciation of year 2 will not be calculated on 10 lakh. Depreciation on year 2 will not be calculated on 10 lakh in this method. It will be calculated on the balance, or we can say that it will be calculated on WDV. Okay, so this is the difference between WDV method and SLM method. 10%. So what will be my depreciation? Sir, my depreciation will be 90,000. And what will be my WDV? Sir, my WDV for the third year will be 8 lakh 10,000. Now again, I will charge depreciation for year 3. Now what will be the amount of my depreciation? Sir, I will charge depreciation on this amount, the balance amount, the WDV. 8 lakh 10,000 multiplied by 10%. This will be my depreciation. And what will be my WDV? Sir, my WDV will be 7 lakh 90 or 29,000. Okay, so write down note, depreciation value will decrease as increase in years, because depreciation in WDV method is charged on net value, or I can say that WDV of asset. Okay, so in WDV method depreciation will be decreasing, but in straight line method I always get the same depreciation for the all years, because the depreciation is calculated on original cost. That's why this method is also called original cost method. This method is also called original cost method. ओके, लिख लिया? लिख लो आराम से. So we will read two methods. One is straight line method. If we get question of straight line method, that then in question he can give us the original cost, he can give us the life, he can give us the residual value. But if the question comes for WDV, he will always give you the percentage, because in simple calculator we cannot calculate this. Okay, okay, write down concept number 5. Write down what will be the original cost of asset. So what will be the original cost of asset? First of all, let me show you. I have written the original cost in many sentences. I have written where yeah. Asset cost. Cost means original cost. And we have written it in this. Cost of asset means original cost. So this is what is the cost or original cost of asset. We have to figure it out, we have to know it. Let us take an example. Do not write it, I will give you time to write it. Let us take an example. I need a machinery that is not available in India, so I order it from Germany. I give a order for 100 crores. The machine is for 100 crores. Now, what will be my value of machine? Now, what will be my value of machine? I gave rupees 100 crores in dollars and I converted it. It will be around 100 crores. Now, from Germany, it will travel and come to me in, let's suppose, Mumbai. I will install this machine in Mumbai. So when it comes from Germany to India in Mumbai, will there will be any other expenses or not? Yes, sir. There will be transit expenses or your conveyance expenses. Let's suppose it is around 5 lakh. It is around 5 lakh. And when it reached to Mumbai, does it plug and play? Does it machine is you plug the switch and push the button on and you can use the machine? No, sir. You have to install this machine. You have to install this machine, and the cost of installation will be around 50 lakhs. Let's suppose cost of installation will be around 50 lakhs. Also, you need some technical persons, or I should say engineers, because this machine is not available in India, because it is not manufactured in India. So I have to order it from Germany. So in India, when I install this machine, I will not get any person, I will not get any engineers that know how this machine works. So I called some technician or engineers from Germany as well as, and I will pay their fees. Let's suppose their fees is 10 lakh. They will tell our person how to use the machine, how to operate the machine, how we can repair if there is any small errors or any other things. So I will pay the technician rupees 10 lakh. Now I'm asking you, what will be my value of machine? Is it 100 cr, or should I add 100 cr plus 5 lakh plus 50 lakh plus 10 lakh? Or should I ask add 100 crores, 50 lakh, 5 lakh, 50 lakh, but not this technical fees? What should be my value of machine? Is it practical problem or not? This problem does not come in your question, but when you go when you go and work, then you will face these kinds of practical problems, and you should know them right here, so that you will not face any problem, and you have the knowledge to handle all the things. So what will be my cost value of machine? So to find out the value of machine, we have to go to accounting standard. Which accounting standard, sir? We have to go to accounting standard 10, that deals with fixed assets. Sir, accounting standard says that value of asset includes cost, whatever the cost of the asset, transit cost, installation expense, and any other expenses to make asset ready to use. To make asset ready to use. In simple words, I can say that, let's suppose you bought a AC. The cost of AC is 50,000, and you said to shopkeeper that you will provide the AC on my residence, and the amount of installation, I will pay the installation charges. The cost of AC is 40,000. The transit fees or the conveyance fees is 500, and the installation charges is 1500. Now I will ask you, how what is the value of AC? ये कितने का पड़ा? Then you will say that the cost of the AC is 40,000, but it is ready to use when I expense some more, and I expense a total of 42,000 to make this asset ready to use. So what accounting standard 10 says? Accounting standard 10 says the all of the expenses, collect all of the expenses, add all of the expenses in cost of asset till the asset is ready to use. Come on, the main point here is ready to use. Ready to use. Okay, so till I purchase the machine, when I purchase the machine, till it gets ready to use, it get ready to use, then all the expenses on that machine will be added to the cost of this machine, and the total amount will be my original cost. So in that case, what will be my original cost for depreciation? So my original cost for depreciation.
cost of asset rupees 10,000 lakhs. I'm taking the value in lakhs
because I've
taken the amount
as 100 crore.
what is 100
crore? Sir, 100 crore in terms of lakhs will be
10,000
plus transit cost or conveyance cost.
what will be that conveyance cost? It is 5 lakh plus what is the installation cost? The installation cost was 50 lakh. And what was the technician or
engineer's charges till the asset become ready to use? Engineering charges 10 lakh.
So what will be
my
value of asset
for the purpose of depreciation? Sir, the value will
come 560,100,065 lakhs. So
my original cost will be 10,065 lakhs
for the purpose of calculating
depreciation. Okay, clear? Have you written off all of this? Okay, now
concept number 6. Don't worry, this is the last concept. After that, we were able
to do the
questions.
Write down what are the methods of recording depreciation in books of accounts.
So what I'm saying that I'm saying that
what are the methods
of recording depreciation in books.
So write down what we have studied yet. Sir, we have studied about depreciation, that
there are two things.
First is about charging depreciation, and we have two methods for it. One was straight line method and other was WDV method. Now we are studying about, we're understanding about how we recognize, how we record the depreciation. First we calculate the value. How we calculate the value? So we can use straight line method or WDV method. After calculating the depreciation, there are two methods by which we can record depreciation. Come on, we can record depreciation in our books. So there are methods for recording depreciation in books of accounts. So there are two methods. One method is, write down, asset is shown at its net value, or the second method we can use, asset is shown at its original cost. So the first step in depreciation is we calculate depreciation. So how we can calculate depreciation? Sir, we can use straight line method or WDV method. After calculating depreciation, the next step is how we can record this depreciation. sir, we can record this depreciation as per the net value. We can show asset at its net value, or we can show asset at its original value. So in this case, when asset is shown at net value, only asset account is prepared. यहाँ पे एक ही अकाउंट बनेगा. We will prepare only one account, that is asset account. But if we are showing asset at its original cost, if we are showing asset at its original cost, then there will be two accounts. One will be asset account and other will be provision. इसको थोड़ा सही से लिखता हूँ. And second will be provision for depreciation account, or we can say that accumulated depreciation account, or accumulated depreciation account. So
there are two methods of recording depreciation. One where asset is shown
at its net value,
only one
account is prepared, that is asset account, and the other method is where asset is shown at its original cost. If asset is shown it at original cost, then there will be we shall prepare two account. One will be the asset account and other will be the provision for depreciation account. Let us take
take an example
and then
we shall study both of the methods. Write down
example:
machinery
purchased rupees 10 lakh, and the method of charging depreciation, is 10% straight line method. So what is the method? Method is a straight line method. Now we shall check what will be the recognition method, or what is the method of recording depreciation in the books of accounts. So let us take case number A. When machine is shown at net value, prepare machinery account for 3 years. Okay, so what is the method? The method of charging depreciation is straight line method. And what is the method of recording depreciation? Sir, it is net value method. Okay, so in net value method, we always prepare only one account, that is the machinery account. So we shall prepare the machinery account. Machinery account means machinery ledger account. So there will be date, particulars, amount, date, particulars, and amount. Machinery account. Write down machinery account. So there is the column one is date, second is particulars, then amount, then date, particulars, and then amount. So what is the value of machine? Sir, machine is purchased for rupees 10 lakh. So what will be the journal entry? Sir, journal entry for purchasing machinery or purchasing asset is asset account debit to cash or bank. Let's suppose we bought this machine on 1st of April 2025. So what is the journal entry? So journal entry is machinery account debit to bank. So we will write here to bank 10 lakhs. The purchase price of machine is rupees 10 lakhs. Okay. Now depreciation will be charged at year end. Come on. Depreciation will be charged at year end. So if I purchase the machinery or my financial year starts from 1st of April, then what will be my closing date? Sir, my closing date will be 31st March 2026. And we will charge depreciation. So we will write here depreciation. So what will be the journal entry? So journal entry for purchase of machinery. The first entry was machinery account debit to bank with rupees 10 lakh. And what will be the entry for charging depreciation? So charging depreciation entry will be depreciation account debit to machine. The machine account is credited because we have to reduce the value of machine. We have to reduce the value of machine. Now we have to calculate the depreciation. Come on, we have to calculate the depreciation. For calculating depreciation, come on, for calculating depreciation, for charging depreciation, we have two methods, straight line method and WDB method. In this question or is in this example, what is the method of calculating depreciation? Sir, it is 10% straight line method. And in straight line method, in straight line method, depreciation is charged, come on, depreciation is charged on the original cost, come on the original cost. Now when you charge depreciation, always remember, you have to consider three things. Whenever you are charging depreciation, you have to consider three things. First, method. First is method. Second, time period, for which how much time period you have used the machine. For example, if you have used the machine for 6 months, then depreciation will be charged for 6 months. And the third is rate. So in this example, the method is straight line method, time period is 1 year, and rate is 10% per annum. Okay, so in straight line method, depreciation will be charged on the original cost and the rate of depreciation is 10%. So what is the value of 10% of 10 lakhs? Sir, it will be 1 lakh rupees. It will be 1 lakh. So I have purchased the machinery for rupees 10 lakh and charged depreciation 1 lakh rupees. Purchased the machine for 10 lakh and charged depreciation 1 lakh. So what is the balance of machine? Balance, carry down. So the balance of machine will be 9 lakh. And we shall close the account for the year 25-26. Here 10 lakh, 10 lakh. Okay. Now the balance of machine of 9 lakh on 31st March 2026 will be opening balance on 1/4/26 to balance brought down 9 lakh. On opening balance on 1st of April 2026, how much value the machine is showing? Sir, machine account showing value of rupees 9 lakh. So if I have purchased the machine for 10 lakh, but if I check the balance sheet, if I check the balance sheet on 31st March, the value of machine will be shown in the balance sheet for rupees 9 lakh because we have charged depreciation of rupees 1 lakh. Okay, so for the year 26 and 27, at the end of the year, that is 31st 3 27, I will again charge depreciation by depreciation. And when you charge depreciation, you have to consider three things. What are the three things? Sir, method, time, and rate. So method is straight line. That means depreciation will be charged on original cost. multiply. What is the rate? Sir, rate is 10%. And what is the time? Sir, time is whole year. So it will be 1 lakh rupees. Simple. So what will be my closing value? Sir, my closing value will be, if the machine was rupees 9 lakh, I have used for rupees 1 lakh, then the machine value will be 8 lakh. And I will close the account. Here we will write the total 9 lakh and 9 lakh. Okay. So we have prepared the account for 2 years. So in this example, what I have taken, sir, I have taken the charging method is straight line method, or calculation method is straight line method. And when I show the account, when I show the asset in balance sheet, it is shown at net value. How? Look at this. What is the value? 9 lakh. At what value I have purchased? 10 lakh. But I have deducted the depreciation. Now in the balance sheet, in the balance sheet of 2025, 25 and 26, in the balance sheet of 25 and 26, what will be the value of machine? Sir, value of machine will be shown at rupees 9 lakh. Why? Because I have purchased for rupees 10 lakh on 1st of April, but on 31st March 2026 I have charged depreciation 1 lakh and deducted the value, so the closing balance will be 9 lakh. And if I prepare the balance sheet for 27, 28, then what will be my value of machine? The value of machine will be 8 lakh. Therefore, this method is called net value method, because asset is shown, because asset is shown after deducting depreciation. After deducting depreciation. Okay. लिख लिया? Have you written all this? Sure. Example number 2. The last example of this class, then we will wind up. And in the next class, we will do some heavy and बढ़िया questions. Good questions. Sure. Suppose value of machine or purchase value. Let's suppose we have purchased a machine rupees 10 lakh. And the charging method or calculating method of depreciation is 10% return down value. Now consider this, what I have taken here. I have taken the method of charging depreciation return down value. Okay. And what is the presentation in accounts? So presentation or recognition, it will be, write down, prepare machinery account and provision for depreciation account. Now I have to prepare two accounts. One is machinery account and other is provision for depreciation account. Now in this question, it is not specifically written that you have to show the asset at its original cost. It is not specifically written. It asks me to prepare machinery account and provision for depreciation. And these two accounts are prepared when assets are shown at its original cost. So we have to prepare two accounts. Okay, solution. We have to prepare two accounts. First one will be machinery account. So this is my machinery account. And other will be my provision for depreciation.
तो दूसरा अकाउंट हमारा बन जाएगा सर, दूसरा अकाउंट कौन सा बनेगा? दूसरा अकाउंट बनेगा हमारा सर प्रोविजन फॉर डेप्रिसिएशन अकाउंट. मैं हिंदी में भूल गया. सो what will be my second account? My second account will be provision for depreciation account. Okay. Now, the method of charging depreciation is WDV, but the method of recording depreciation in books of accounts is original cost method, where we prepare the machinery account as well as provision for depreciation account. Now, listen carefully. Now, first of all, when we purchase the machine, what will be the journal entry? Sir, the journal entry will be the same. यानी कि machinery account debit to bank. On 1st 4 2025, let's suppose we purchase the machinery. So in the machinery account, we will write to bank. This is the entry for purchasing the machine. And what is the value of machine? Sir, the value of machine is 10 lakh. Now, at the end of the year, what is the end of the year? So 31st March 2026 is the end of the year. What will we do? Sir, we shall charge depreciation. Come on. We shall charge depreciation. Now, again, when you're charging depreciation, you have to consider three things. What are the three things? Sir, these were number one, method. What is the method? Sir, method is WDV. Second is time. Set time is 12 months. And third was rate. So rate is 10%. Okay. So what will be the amount of depreciation? So depreciation will be charged on the basis of WDV. WDV means the value we get after deducting depreciation from the cost of the asset. But it is the first year, and first year we have only the purchase value. So what will be the depreciation value? So depreciation will be charged on the opening balance, that is rupees 10 lakh. So what will be the amount of depreciation? So depreciation will be 10 lakhs, 10% for whole year. It will be rupees 1 lakh. Now listen carefully. What is the journal entry for charging depreciation? Come on. What is the journal entry for charging depreciation? So in net value method, we have done earlier the above example. In the above example, not this one, the earlier, what was the entry for charging depreciation? Sir, the entry for charging depreciation was depreciation account debit to bank. Depreciation account debit to bank. But in this method, so in net value method, the entry is depreciation account debit to machine. But in original cost method, now listen carefully. But in original cost method, what will be the journal entry for charging depreciation? So depreciation is our expense and all expenses are debited. So we shall also debit depreciation. But again, but we will not debit machinery account here. We will not credit, sorry. We will not credit machinery account here. Why? Because sir, if we credit the machinery account, come on. If we credit the machinery account, what we are doing, sir, from the debit balance, we're reducing the depreciation by crediting the machinery account. Come on. If we credit the machinery account, we are reducing value of the asset by depreciation value. So we will not credit machinery account here. So what account we credit? Sir, we will credit provision for depreciation account. So in place of machinery account, come on, in the net value method, we credit the machinery account. But in original cost method, in place of crediting the machinery account, we shall credit provision for depreciation account with the depreciation value, rupees 1 lakh. Okay. So here, no machinery account, no asset account is credited. What we are doing, sir, we are debiting depreciation account and creating provision for depreciation account. So the entry will be go the entry will go on or in provision for depreciation account by depreciation 1 lakh rupees. Okay, sir, what will we do for the machinery account? We have no entry for machinery account. We only debit the machinery account, but we are not crediting machinery account till it is sold. So there will be no entry in the machinery account. And what is the balance carried down? Sir, balance carried down on 31st 3 26 is rupees 10 lakhs. Okay, and in provision for depreciation, sir, the balance will be 1 lakh rupees. On 31st 3 26 by balance carried on 1 lakh. Okay, it was easy. Now, if we prepare the balance sheet, come on, if we prepare the balance sheet on 31st 3 26, if we prepare the balance sheet on 31st 3 26, what we show in balance sheet in the asset side, sir, we shall show the machinery account at which value, sir? Machinery account, check what is the balance of machinery account, sir? 10 lakh. What is the balance of machinery account? 10 lakh. So what will we show in balance sheet, sir? We will show machinery at rupees 10 lakh. Okay, and here, from here, we shall deduct the balance of provision for depreciation. What was the balance for depreciation, sir? It was 1 lakh. It was 1 lakh. So we shall deduct here 1 lakh and we shall show the value at rupees 9 lakh. Okay. Now, why we call this method original cost, sir? Because as you can see, the machinery account balance is 10 lakh. The value at which the machinery was original purchased, come on, it is the value, it is the value on which machinery was originally purchased. Okay, it is the value on which was originally purchased. Now we have not credited anything in the machinery account, so the value will be the same. Okay, and for the depreciation, we are taking depreciation to a provision in another account, that is called provision for depreciation account, in place of the machinery account. So we have two account balance, one is debit and one is credited. So debit balance of machinery is 10 lakh and credit balance of provision for depreciation is 1 lakh. We shall set off these balances and show these balances in the balance sheet. We shall set off these balances and will show these balances in balance sheet and write here the net value. Okay, it is easy. Now for the next year, let's go for the next year. This balance CD in the machinery account on 1/4/26 will become to balance BD. What will be the balance, sir? 10 lakhs. And in provision for depreciation, sir, here 1/4/26 by balance BD, brought down, because it is the opening balance. Opening balance will be written as brought down. Okay. Now after the year end or at the year end on 31st 3 27, what will we do, sir? We shall charge depreciation. Come on, we shall charge depreciation. Now the three things you have to consider: method, rate, time and rate. What is the method, sir? Method is WDV. So you have to charge depreciation. Come on, you have to charge depreciation on written down value method. Okay, for the year 26 and 27 you need WDV. So what is the WDV? The WDV means the cost of asset reduced by the depreciation. So for the first year we have purchased machinery for 10 lakh but we charge depreciation 1 lakh. So the WDV is 9 lakh. Second, first is the method, second is the time is 12 years or 12 months, sorry. And third is rate. So the rate is 10%. So what is the value of depreciation? So depreciation will be charged at WDV, means written down value method, at the rate 10%. It will be 90,000. It will be 90,000. Okay. Now we have to record this depreciation in books of accounts. Come on. What will be the entry for recording depreciation? Sir, entry for recording depreciation will be depreciation account debit to provision for depreciation. Now we shall write by depreciation. What is the amount, sir? 90,000. Okay. And sir, in machinery account, sir, there is no entry in machinery account because we are not taking the depreciation in the machinery account. We are not reducing the value of machinery account. We are taking the depreciation into directly to the provision for depreciation account. So there will be no entry in this account. And here the balance is again 10 lakh rupees at the original cost. Therefore, this is method is called original cost on 31st 3/27 by balance carried down 10 lakhs. Now, in provision for depreciation, sir, first year depreciation was 1 lakh. Now depreciation is 90,000. Total is 1,90,000, and there is not any amount debited here side. Therefore, the balance by balance CD will be 1,90,000. Clear? Now we shall prepare the balance sheet. Now for the balance sheet 26 and 27, we will show the machinery account at which amount, which value, sir, at the original cost, because here also what is the value of machine, sir? 10 lakh. Because sir, we have only written an entry of rupees 10 lakh when we purchase the machinery. After that you can see there is no entry in the machinery account. So we have opened the account at rupees 10 lakh, and since there is no entry in the credit side of the machinery account, the balance is shown at original cost. So what will be the cost of the machine? We will show at the balance sheet, sir. We will show at rupees 10 lakhs reduced by the provision value of provision for depreciation. So what will be the provision for depreciation value? Check from the account, sir. The balance was here, sir, 1,90,000. Here 1,90,000. Now what will be the value of machine? Net value of machine is 8,10,000. Okay, so this is the original cost. This is what is 1,90,000. So this is accumulated depreciation of year 1 and year 2, here you can see that in the year 1 we have charged depreciation for rupees 1 lakh, and now for the year 2 we have charged depreciation of 90,000. So the total depreciation for year 1 and 2 is 1,90,000. So therefore it is also called, come on, it is also called accumulated depreciation account. I have written it somewhere. Here, accumulated depreciation account. It's easy. Have you understood all of this? Easy है, समझ आ गया? चल. So guys, this is the end of our class. In the next class we shall do some questions, and we shall study some questions about depreciation, and how we can prepare depreciation account, provision for depreciation account, and what will be the entry for selling the asset, and if we sell the asset at low value, there will be profit or loss. We shall study in the next class. Okay, bye. Jai Hind.